Very good morning, good afternoon, everybody. Very good to see you. Hope you had a nice weekend. I've got a CNBC Arabia interview at 3:15 UK time. So that's why I'm suited and booted. So you can enjoy the smarter version of me. Yeah, it's nice. I do like CNBC Arabia. They've got some really good news anchors there. Chapkid Hussein and May Ben. It's a male and female team, and they're really excellent. I really love their take on the markets. And the only shame is that it's in Arabic, so it's not more widely available. A few things to share today. And we're just going over, first of all, to be helpful. If you're new and you're just sort of getting started, this kind of thing, and you're not journaling, you need to be. It really does help you reflect and see mistakes that you're making. Also shows what you're doing well. And a very helpful thing. Now, I was reflecting. I was going to start with some reflections to start. And do let me know if this is helpful or if it's not helpful, so I can, adjust what I'm doing. But I was looking at my trades from last week, and a couple of things I noticed over the weekend is that last week I reduced my position size to deal with the rising volatility, and that did work last week. Good, strong, solid week, but the downside I noticed was a drop in win percentage, number one, and also there was greater fluctuations intraday, and I saw that there was 2 days I was about $1,300 up in a couple of sessions last week, only to end the session around break even. Now, if you look at this here from last week, it's these entrants here, 1, 2, 3, 4, 5. You can see these two entries here. That was really disappointing because I was up about 1,300 this day, and similar with this day. That $600 loss was opening the multiple positions by mistake on one account, trying to ride it out and not being able to. So that was the worst error of last week, and that's a goal of this week, not to repeat that, to get it better than this week. The worst trade needs to be better than last week's worst trade. And also the aim is, reminder, if you enter multiple positions by mistake, exit immediately. Don't just try and ride it out. So that's what I've learned. But the point I want to make is, notice my win percentage went down compared to the prior week, where the average from the prior week was probably somewhere up around sort of 88, 90%. But it dropped down last week, and particularly the 2 days that became break-even trades, look, 49.60. Now, part of that was from chase back some losses. So at one stage, I was much further down, and I chased that back. But I was having to enter lots of different trades, being very nimble. And so what I noticed, and when I looked at the week, was actually this week, I want to be more conscious of the fact that reducing position size means that I'm more likely to take trades because I'm less attached to each trade, you see. So the good news about reducing the position size, it took some of the stress away from, this is too much, this is too big a position, good. But it had the reverse effect that emotionally I wasn't attached to any trades. Like, I'm taking that trade, too loose. So this week, I want to be more conscious of what I've explained, take fewer quality trades at better prices, rather than allowing the smaller position sizes make me too quick to enter and exit, and to avoid the death by 1,000 cuts idea. So that's an extra thing that and also I'm noticing that last week it was after 3:30 where I entered trades and I was getting the losses. So I need to be wary of trading after 3:30, a bit of fatigue. And also you can see on my diary, I've got my emotions. That LOS entry means lack of sleep. Now, it was quite unusual because on this day, I was not feeling tired, right? And if I look back to how I was feeling, and I remember it, because I remember thinking my emotional state pre-market was good, right? But I've said like lack of sleep the night before due to a later appointment and travel the previous day. So isn't it interesting? Hey, Nadja, I'm just going through good to see you, mate. Just going through some observations from my journal over the weekend. And what I was just drawing to people's attention was that this day here, I got lack of sleep, and that was my worst. That was when I made the mistake. So it's very interesting to see the lack of sleep It was my lowest win percentage.
Just having a look at US dollar has now come off highs, currently at 113.16
and
now.
And it was my worst trading day.
13 handle.
So even though I remember thinking at the time,
just off those earlier highs there of 114.
I sort of thought, oh, I've escaped it. Oh, good. I'm not feeling tired. Great, because I knew I had a lack of sleep. But actually, maybe the lack of sleep impacted me much more than I felt. I think I was still going on some adrenaline, had a couple of appointments over on the Monday. I remember my car was in the garage, I was rushing around. So I had this kind of like rushing scenario, rushing to appointments and trying to squeeze things in. And then that's not a surprise, really, is it? So just a bit of trying to have a bit of self-awareness. And this is the nice thing about a journal, is it can help you have some. Now that could be one, that could just be a coincidence. It could be. However, what the journal does is it's going to help me try to spot patterns, and hopefully over time, you'll start to see the patterns. And I can definitely see on this Friday. This is what I was sharing, Najam here, was that the reduction in the position size made it much easier to deal with volatile markets, but made me much more willing to enter in, exit the market, many more trades, with the result that I was letting profit go when I shouldn't have been, and I was, just being too quick in and out, and that contributed, I think, after 3:30 to a couple of poor trading decisions later on in the session. So these are the 5 goals I've got for this week. I want to try and take 2 profit based on market conditions, not on feelings of urgency, twice. So failed the week before to just do it universally. So this week I want to reduce the goal and just give myself, if I can have 2 trades where I'm taking profit based on the market conditions rather than the fee. If it hits target, value area, point of control, that's fine. But I'm saying is if your trade's running and there's times I'm thinking there's no reason for this to reverse, I just want to take the profit. Actually, if the market condition is encouraging more selling, go with it, right? You might get another 5, 10, well, this market might get another 25 points, right? So that's my first goal. I want to do that twice in the week, if I can. That's my challenge. If I enter multiple trades by mistake, exit immediately. 2, to limit my maximum loss in a single trade this week to sub 260. So that's the most amount I can lose per trade. That's just about $1,100 for the day. And that's my maximum loss in a single trade. Could have that as a maximum loss and then enter a subsequent trade. That's fine, but just the maximum loss in a single trade, sub 260. Wary of 330 and try to be more conscious and taking fewer quality trades. Sub goal as well that's in the back of my mind is looking to add into positions. Okay, and by taking better quality trades, it should be easier to add in because you're in a much more advantageous position, right? So that's what I'm looking at for this week. Right, folks, the fundamental drivers, let's get into it. So the main fundamental drivers is that equity markets are feeling optimistic because President Trump has removed those tariffs, reciprocal tariffs on iPhones, and you can see that Apple shares are up pre-market 4.5%. Now, Jem, I remember it very well, and when you said it, I listened to what you were saying and accepted it that it would be good, and I just needed to find the right solution for me, and finding this kind of notion was the right solution. And I think that's good for all of us, basically. And the idea we can look at this and to keep a record of things. And yeah. So thank you very much. I remember I heard you. You know what I mean? Was it? You might have said it once, but you didn't need to tell me twice. You know what I mean? I'm listening. So thank you, there, Jim. So equity, Apple shares up about 4.5%, and look here. Everything's feeling optimistic. Everything's wanting to move higher. And the thing you need to be aware of at the moment is this one chart will help you. That's all you need right now is the US bond market. Now, what got Trump to change his mind was this bond market. And there's an old saying in markets that the bond market is the truth. So in other words, what the bond market is doing is a true reflection of the market. The reason that is because bond traders tend to invest 6 months, 12 months, 18 months or longer. And they're often handling very large investments, hundreds of millions of pounds of dollars, and people are looking for 3, 4, 5% return. So bond traders have a real good sense and a feel for where the economy's heading. And when the bond market shot up like this, that is traders selling US treasuries. They're not buying them. Now, normally when it's a risk-off market and you're seeing equity markets in the US falling, normally you would see the bond market moving lower. Do you see initially Trump announced tariffs, didn't he, in March? And look at the first reaction. Yields lower, 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 lower. Scott Bessel, we want to have lower yields. Everyone's happy because when the yields are lower, it's a confidence in the US government essentially. They're safe, they're secure, they're going to be reliable when things go wrong. This move in yields, right? And remember, at the same time, the dollar's moving lower. That's like sell America. That's what's happening, and that's shocking. As long as I've been in the financial markets, it's never been a question that the US is the #1 economic powerhouse in the world. This is the first time I've seen a wobble in the US bond market like this. Now, if you remember in the UK, Liz Truss, do you remember when we had a wobble in the UK bond market and Bank of England had to step in to stop a collapse of the UK economy essentially, and Liz Truss lost her position, right? That's simply because the bond market is the truth, and all politicians will ultimately serve it. You can't sort of run roughshod over the bond market unless you're in a much less developed country, stroke at war, and things are going completely so wrong. In normal peacetime, wobbles in the bond market gets the attention. That's what got Trump worried. So, thing to note: Wednesday we've got a bond auction coming up, important one, for the 20-year bond auction. Now, if that has very weak demand, right, if there's not much demand for it, what that means is that people aren't buying the bonds, and then the yield will keep moving up and markets might panic. If there's strong demand for that bond, it means that investors are saying, no, we're really happy with this yield at 4.5%. We want to get it. We trust in America still. Whereas what this showed you is that when Trump announced his tariffs, it wasn't the question of the world just looking on going, ha ha ha, that's Donald Trump, isn't it funny? This is amusing. It's essentially sheer panic. I'm thinking, oh my goodness, Donald Trump is going to crash the US economy, and with it potentially the global economy. And remember the old saying that money goes where it's welcome and where it's well looked after. It's a bit like someone looking for a good restaurant or a good friend. Where do you go? You go to the people that are kind to you, good to you, look after you. So why on earth is a global investors going to want to put their money into a US administration that is essentially embarking on a competitive relationship with the entire trading world? Of course, and the bond market told you the truth. And that's why Donald Trump today said, I jotted this down, he said, the bond market, he said, it's going good. There was a little moment, but Trump has solved it, right? Well, yes, he has kind of solved it, fair play, and he also caused it as well. So he is the answer to his own prayers, so to speak. So keep your eye on the bond market. Today, there's bids coming into the bond market. That's good, right? And if you look here at the dollar, you see the dollar's continuing to move lower in a kind of sell everything. This is bad for the US dollar. There's going to be stagflation. There's going to be slowing growth. And how far this rally can go, we'll see. There's lots of really interesting moves in markets today. If you take a look at SIL, there's lots of kind of like reversals going on in markets. So Walmart, you can see here, big bullish engulfing bar on the weekly chart, engulfing 1, 2, 3, 4, 5, big reversal trying to go on there. Remember silver, that has now put in a solid bullish piercing line. Remember the piercing line pattern? It's a 2 candlestick pattern on the weekly chart. This is very bullish. And you see here, when you have one candle, second candle, right, opening, when you have that opening below that first candle there, you see that's a gap open, so gap lower. It looks like sellers are going to go on forever. But instead of the sellers going on forever, the price closes higher and it's closed above the 50% retracement level there, right? So that's a reversal pattern in silver, nice and strong. And you're just seeing general bullish sentiment around the world. with the dollar weakness, euro dollar, expecting dip buys here in the S1 and expecting dip buys in pound dollar and dollar yen sellers, right? That's kind of the big picture that's out there. Looking at currencies, you can see it's a risk on kind of bias. You got Swiss franc towards the bottom of the pack, pound, New Zealand dollar up higher, so dollar sort of roughly in the middle, but it's generally sort of risk on sentiment out there as we go into the session. However, we remain highly sensitive to news. So looking at the E-mini in detail, let's see what we've got. On the hourly chart, inventory is positive. From the Globex Open, we've been positive and price has been trending higher. We have sellers trapped here, right, at this 5475 level towards the developing value area high for the week, right, and above the point of control. So this means this area here, 5475, you see there, trap sellers, price has broken here on the most amount of volume, trapping these sellers there, right? You see that? So that's a buy area. We're looking for trap buyers and sellers there around that 547R5. So if we come back down to that area here, this whole zone now becomes a buy area. It's just this is not a bad area for dip buying. Okay, point of control on the weekly chart. We're now there at the point of control weekly chart is there 5454. Although this is a large move in the current markets, it's just another little part of the micro story, Mauricio. There we go. Right, so break underneath that level, then that should be, yeah. So happy to sell back up into this 5449, 5452 region. We've got volume there. Let's see if we get that. Okay, so I'm going to sell off against that level there. Right, I've just sold my position. So let's hit that point of control, right? And you've got buyers trapped there. Let's see if we can get back underneath it. Let's see, maybe another one above. If we hit the daily VWAP, yeah. Enter another one, hit the daily VWAP. Let's see. So I've got a sell in there. That's quite a strong reversal. Just gonna hold it, see if I can get a bit more out of this. Nice one there, Jim. You got the 15 trapped. So I'll give it a little bit more. It's just, I've got the 15 trapped. Let's see. So you've got sellers heavily selling off on volume. Got 15-minute buyers trapped there. Let's see if we start to get these buyers trapped. Quite an important area here. Okay, Delta coming back in there. That's good. It looks good, doesn't it? Delta's lower. Looks nice. See if I can get underneath that 1 minute. Right, I've just closed that out. I don't like the way that's being bid. Right. So what I don't like on that one, it's a very small profit, right? What I don't like is this kind of rejection of this 5. See the problem? So yes, you got sellers there, great area, but it's this is a rejection. I want to see that. So today, for me, disappointing day. It was the maximum loss that I'm allowed across all 4 accounts. That's $2,400 down. The main mistake for me today was buying into a long that was correct, and then I just held it too long. So seeing these buyers trap those sellers, buying into it, and then trying to go for the second standard deviation up the highs of the day. And having had a loss earlier, I was trying to see if I could hit the second standard deviation and then held on despite the evidence contrary with these sellers trapping buyers. Would have been a great place for a short, as you can see. And you can see further buyers getting trapped by sellers, moving its way down all the way during the session. And I exited up here just around that point of control, held on for the last minute just to see if this value area would hold. It capitulated, and it was around this point here when I was out for my maximum $600 loss. That's absolutely fine. That's why I have limits in place so that my worst day is not going to ruin my day. It's just the end of the session, and we'll be back fighting fit tomorrow. Hope you all have a very good session. Look forward to seeing you tomorrow, folks. Have a really nice rest of the day, and look forward to seeing you tomorrow. Bye for now.